Uh, good afternoon, everyone. Welcome to our SDIRA education series. This is Shri, and today we are focusing on a topic that every self-directed IRA investor eventually encounters: delays. So, if you have tried to fund a real estate deal through an SDIRA, you already know that process doesn't move like a wire or an ACH. It moves through a regulated workflow inside the custodian. And when you don't understand that workflow, delays can quietly derail your timeline, your closing, and your investor experience. So, our goal today is simple: make SDIRA delays predictable, understandable, and manageable. So, once you know where delays originate, you can structure your deal timeline with confidence. So, why this topic matters? So, SDIRA capital is one of the most powerful tools in real estate investing, but it's also one of the most misunderstood. So many investors, they don't realize SDIRA funding touches compliance review, documentation verification, custodian approval, transfer timelines, rollover timelines, and sometimes employer plan release schedules. So each of these steps can introduce friction, and friction becomes delay. So today we are going to break down exactly where those friction points occur. So I'm introducing the guest for today, Andrea. So welcome, Andrea. Uh,
Hmm.
She's from
Thank you.
Insura Financial. She works directly with SDIRA investors every single day. So
That's right.
she sees the operation side of transfers, rollovers, compliance checks, and funding cycle. So welcome, Andrea.
Thank you so
You
much,
can just
Ray.
go ahead.
Yes. Happy to be here. Thank you for having me on the second cut of this series of webinars. But yeah, sorry, my apologies. Today is a little rainy here in Houston where I live, so it's a little dark. But anyway, let's go ahead and get started. And so, like Shri was saying, today we're bringing a short list of the most important and more common delays when you're doing a self-directed IRA investment. Just want to go over them with you for any new or not that new IRA investor, self-directed IRA investor out there that is interested in these. Um, and yeah, we'll start with the operator lens, the part w- on the side of the operator. I'll go over them and then Shri, feel free to chime in if you have anything to add. And of course, we always start with deal timing.
Sure.
Um, Deal timing is important, and this, I guess, is starting from the end. Okay, so usually operators have a deadline of when they want. They say we're raising capital and we're doing it, in a month, 2 months, or ongoing. It depends, but you start there usually. This is your, deadline, so you need to get everything done by this date, and you need to be able to go through the process and send the funds over to us before this deadline. So this is always really important to ask and to know. Okay. And then bottlenecks, missing documents, entity structure confusion, slow investor responses. So we can break these down, but yeah, documents are very important. And though there's not very that many documents, depending on the deal, all of them need to be in there. And if there's one missing, then that can cause a delay. Entity structure confusion, I'm not too sure about this one. I don't know, sure you whenever you come back, you can talk about this one. Slow investor responses. This is one that's really important to note and something that every investor should um understand and try to because every investor should be um proactive, really is what I call it. And so it should be the investor should be on top of the everything, every process within the process. Um because, people might forget or something might have happened and then, you weren't aware, etc. So you need to be on top of every single step of the process. And then of course, if there's anything that's missing or if either, when the operator reaches out and they need something extra to be able to respond in a timely manner. Um, and then, yeah, expectation setting before investors initiate transfers. So th we'll talk about transfers in a little bit here. Um, which is one of the most common delays here when investors doing a an investment through their IRAs. But yeah, workflow, discipline, templates, pre-clearance, communication, cadence. This is more on the operator lens, and I'll let Sri talk on this one as well in a second here. And then case example showing what goes right versus what goes wrong. Of course, like always, examples are really important to kind of illustrate to an investor what can go right, what can go wrong. And so, if you ever, I'm sure, like if, for an operator, I'm sure they've been through these and they have a lot of examples on these, so they'll be happy to tell you, about them. Um, it looks like she's having connection issues, so I'm just gonna continue, and then we can come back to number one whenever he's back online. But we have the custodian lens. So this is where we come in. I work for Inspire Financial, like Shri was saying. I'm a self-directed IRA specialist. And so this is what I do. I've been doing this for about 5 years now. And so I've seen, I don't want to say I've seen it all because I think that's impossible. And there's always something new that I can see, but I've seen a lot. And so happy to share some of the things here with you guys that, some of the roadblocks and some of the issues that cause delays the most. So internal review steps, compliance, asset review, documentation check. So at Inspire, we actually have a team that goes over, and we call it onboards or reviews the actual investment. So with most operators, for example, like Shri, we've already gone through this. We've already really looked at what the investment is, and it's been onboarded on our platform, so it's already part of our platform. But that's a very important first step that if the company you're investing with or the project you're investing in has not been looked at by my asset onboarding team, then that can cause a little bit of a delay. They take usually, honestly, if they have all the documentation, right? They take only 24 to 48 hours, but of course sometimes they're missing something and it takes a while. So um so that asset review is very important and it's the first one of the first steps really to get you all going. And then transfers. So this is one of the biggest ones I would say. What's ACAT versus non-ACAT? ACAT is an automatic bank transfer. It usually is within like the hour that the other side receives it. And then non-ACAT, you can have checks, wires, for example. Of course, the wire is always going to be faster than a check. Wire usually takes, I think I want to say around 3 hours. And then a check, of course, it takes however long it takes in the mail. So yeah, this is important. Um, for transfers though, it goes actually back to every single custodian has different transfer requirements, and most of us are pretty straightforward. You just need a form and then you need a statement. So that the other custodian can process it. However, some custodians require specific things. For example, there's something called a medallion signature guarantee. Some custodians, depending on the amount that you're moving, that you're transferring, they might require this. And this, you actually have to go in person to a financial, company and that offers this, which not all of financial companies or banks offer this service. So you really have to, there's actually a tool online where you can look up what's your nearest MSG facilitator like around you. So, but this is definitely a step that takes some time for sure. It's time consuming. So the best thing to always do is wherever you're transferring from, whatever company that is, you want to call them in advance and ask them what are their transfer requirements. And like I said, for the most part, for example, the bigger ones like Fidelity, Vanguard, Inspira, actually, they don't really require anything other than the transfer form signed, whether electronically verified signature or by hand, or and a copy of a recent statement. That's it. But again, you want to make sure by calling them ahead what do they need so you can prepare. Okay. Um, regulatory constraints and what cannot be accelerated. Um, so custodians actually have something called the recession period, and that's a 7-day period whenever you open your account first. Uh, Legally by the IRS, the this account cannot actually fund into any investment. So just so you know, the fastest you can fund an investment if it's a new account that you're opening, for example, with us, but really at any place is 7 days, 7 calendar days. That's the fastest. Of course, if you've had your account open already, and that's why we always say if you're thinking about, moving forward with an investment like this, you want to make sure your account is already open and even funded. But if you just decide to kind of quickly and the turnaround's really quick, that's the fastest you can legally do. We wouldn't be able to do anything faster than that. So that's something good to know and to keep in mind as well. Um, what can be sped up? Pre-approved templates, digital forms, investor education. Of course, there's um, never enough to kind of, or actually, there's just a lot of information you can know in advance by asking, your operator and of course your custodian, what can you expect? What are the, this what we're doing here today, for example, will put you in a great position to understand and where are the roadblocks and how can you time manage better and make sure you meet that deadline, right? So that's important. And then you can also, for example, when we go through the process, which is 3 steps: opening your account, secondly, funding it, and third is funding your investment. Um, I actually explained this in the like, at the beginning to my investors, to my clients, and then I can actually also kind of send them all for example, the forms they're going to have to fill out whenever they want to complete step 3, for example, and they can take a look at those and, ask questions if they need to, etc. So there's a lot that you can do kind of just by asking and being what do you call it? Proactive. Yes. And then common investor errors, wrong account
Yeah.
types, missing signatures, outdated statements. So this is something that happens, happens to everybody. There's a wrong, sometimes people put the wrong like social security number. It's just like a typo or something like that that can, of course, cause delays. Um, and one thing that's really common that I always see, which, is worth mentioning here, is the fact that a lot of people, when they operators and the investors, when they draft the investment documents, whether that's the subscription agreement and stuff like that, they add the name of the investor instead of the name of the IRA, for example. And this is like number one, because it's the actual IRA that's going to be doing the investment, right? So it needs to be in the name of the IRA with the right vesting, the right address, which is again is the address of the IRA, not the address of the investor. So that's really, common that you see there. People put their own personal names and addresses on the investment documents. And of course, we have to send those back so that they're updated. So that's another really common you know, delay, I guess. And then 3, operator custodian handshake. So clear division of responsibility. I think one thing I can think of to mention here that's really important is, and I think we touched on this on the first webinar, but it's important to understand what the role of the operator is and what the role of the custodian is. For example, I'll give you our role is to make sure that the documents are done correctly. And we, of course, look into the actual operator and the company you're investing in or the actual project to make sure there's nothing blatantly prohibited. Um, you need to watch the first webinar to because we went on prohibited transactions and disqualified parties. But so to make sure that it's not blatantly prohibited and also that is legal, for example. But that's about it. We don't really do any due diligence on the actual operator. We don't really look at the numbers of the deals. We don't look at anything like that. That's the responsibility of the investor, for example, and the operator to show you all of that. So that's just an example of what, you need to understand what the responsibilities of each side, of the operator and of the custodian are. Um, Unified realistic transfer timeline. So transfer timelines, again, the transfer is always gonna be dependent on the receiving custodian, meaning the where you're transferring from, they're the ones that are gonna dictate what are the actual requirements, what do they require, if it's just a transfer form or if they need anything else specifically. And also they're gonna tell you, this is how long we take to process whether it's a 1 to 2 business days, 3 business days, 1 week, that's going to come from them and not from the receiving custodian. So, of course, we as, for example, Inspira as the receiving custodians, we make sure we send the requirement, the right requirements, and then we also make sure we follow up on a weekly basis, though. But it's up to the investor to actually they can actually if they want to, for example, request to expedite, they can do that but they have to call that rescinding custodian themselves, right? And request that themselves, etc. So, um, again, it's important to note that it really depends on the custodian you're moving from. And some of these questions you can ask them directly. For example, how long do they take, or if they're able to expedite. Share templates, subscription documents, wiring instructions, investment authorization forms. All these are readily available. You just have to ask for them if you want to be, again, and you do want to be proactive. Make sure you ask for all these in advance. And so you have them, you can provide to either side that's asking for them, right? Um, Communication cadence. This is really important. When operator emails what versus when custodian emails. So custodians is important. For example, for us here at Inspira, we have different departments, right? For example, my account opening department is different than my transfers department and then my operations department than for the actual investment. So, and you're going to receive emails, so you need to kind of see where you're receiving them from and what instructions they give you to actually get back to them. So that's alluding to that. And then really, that's mostly what I've seen. Shri, I know we lost you for a moment, and so when I finished number one operator lens, I just continued because I know you were having connection issues. So I don't know if you have anything
Yeah.
to add. I'll stop right there and let you kind of add any other things you would like to.
Yeah, I just wanted to highlight a few key takeaways from what you have
Hmm.
covered, because I feel these are the areas where investors and operators lose the most time. The
Hmm.
first point is, like you said, transfers and rollovers. They're not instant. They actually depend on the releasing institution, but not the SDIRA custodian. So this is where the most investors they underestimate their timeline. And then I also believe that documentation drive speed. I mean, if the subscription documents, operating
Hmm.
agreements or investment directives, if they are incomplete and unclear, then the custodians they cannot move forward. So clean documentation is equal to fast funding. And the final one, the fastest investors are the ones who respond quickly to custodian requests. So, but the slowest ones, they assume the custodian is working on it, when in reality, the custodian is waiting on them. So
Hmm.
these are the three key takeaways,
Yeah, no, I
which
agree.
are
Very good
very
points.
important. So we recommend every investor, I mean, whoever is using SDIRA, to start the transfer or rollover as early as possible. Keeping the custodian requests at the top of your inbox. So make sure the deal documents are they're very clear, signed and complete, and stay proactive throughout the process instead of reactive. So if you follow these steps, you will eliminate some of the delays which Andrea sees every day. So these delays are predictable. They come from very specific points in the workflow. So once you understand those points, you can structure an investment timeline with far few surprises. So this is how you start building investing confidently, avoiding last minute stress. So that's how SDIRA capital can work for you instead of against you. So yeah, that's all I have to share. If you want to share
Yeah.
anything, just go ahead, Andrea.
Sorry, you're cutting out a little bit, but thank you for having me. This was great, and we'll see you on the next one.
Thank you all. Thank you all for joining us today. Bye bye.